Hi there folks, welcome to this week's weekly forecast. It's Monday the 13th of September. Okay, so really busy week last week in the financial markets. As you know, all the financial markets are pretty much linked, like one big pool of cash. Last week, the biggest, I think, mover of the week was the US stock market. Now, the moves you see on the stock market has knock-on effects, as I say, into the currency markets as well. Now, the US stock market last week, it dropped almost 2.5%, depending on what indices you're looking at, S&P 500 or indeed the Dow. Anyway, big drop in the US stock markets. Now, this is basically a consequence of the pandemic. They're believing now that the global growth is going to be slowing down. In fact, there was a survey out today by Deutsche Bank, one of the big banks out there, basically saying that the consensus is overwhelming now that the stock market is due for a 5 to 10% correction by the year end. I absolutely love it when I hear reports like that. I normally use these as reverse indicators. Remember that John Maynard Keynes once said, "The markets can remain irrational for longer than you can remain solvent." The stock market is pushing on and on and on. We're having these pullbacks along the way. Whether you believe Deutsche Bank or not remains to be seen in the future in the stock market over the next few months or so. But at the moment, the stock market is showing a bit of recovery from the pullback we saw last week. And of course, as I say, that has knock-on effects in the currency market. So this is the momentum meter. This shows me exactly what is going on in the currency markets at any one time. As I say, I don't know how anyone can trade the Forex market without using something like this. What you see last week is with the stock market decline, you saw the commodity currencies, that's the Australian dollar, the New Zealand dollar, the Canadian and the Kiwi, all coming under pressure. This is the Australian dollar here, the orange line, the Kiwi was coming under pressure as well, and of course the CAD was down there as well. So these commodity currencies were under pressure last week as the stock markets were falling off. And the low yielding currencies, that's the Japanese yen, the Swiss franc, they're the safe haven currencies, normally the funding currencies. They were showing some signs of strength, oopsie-daisy, showing some signs of strength as the markets were pulling back. Bit of a reversal going on, as I say, at the moment. Okay, so on the basket, we have got the euro showing a weak position. Now, remember, we had the ECB last week, and Lagarde, the president, she said, the lady is not for tapering, trying to coin an expression that Margaret Thatcher used back in the late 80s, 90s and so forth. Basically, they're saying that there's no tapering around the corner for the euro just at this moment. So the euro has been coming under pressure on the back of that. Of course, the tapering talk is still there in the US. They're going to taper at some point, so the dollar is going to remain bid for that reason, and also the fact that there is a bit of a safe haven flow with the stock markets being a little bit weak as well. So the dollar at the moment is showing some signs of strength. This is the dollar at the moment. You can see the green line up here and the euro down there. That's showing you the strong currency, and that is showing you the weak currency. If you're following trends, I always like to buy the strong currencies, the currencies that are heading that way, and I like to sell the currencies that are looking weak, that are heading that way. It doesn't predict the future, but it does tell me where the currencies are heading at this moment in time. So let's have a quick look then at what we're looking at this week. Remember, these are just biases. Don't go off the bat and start trading these. That's not going to make you any money. These are our biases of what we're thinking at this moment in time. They can change throughout the trading week. We're looking for entries in line with our strategies with this bias in mind. So we're looking at the euro against the British pound. As I said, the euro has been trading soft to the downside, and we're having a reasonably strong pound at the moment, one of the stronger currencies. We've broken through a key level of support. Often old support becomes new resistance, and new and old resistance becomes new support. They act as sort of like equilibriums, and either side you see a shift in buyers and sellers and so forth. So now we've broken through this level of support in the euro pound. It's now going to act as potential resistance on the way up, and the momentum bias, you see the fanned out moving averages pointing to the downside. So the euro pound short bias. Also, we're looking at the Aussie New Zealand. These two currencies are correlated. They're both commodity currencies. But it's interesting to see how the Australian dollar is underperforming the New Zealand dollar. Now, the New Zealand dollar is basically sort of just poised for that rate hike that we were going to see a couple of weeks ago, until we had a bit of an outbreak in Auckland of some COVID cases. So that's basically put on hold. But we are seeing a continued weakness of the Aussie against the New Zealand dollar, and that's resulting in a really nice trend to the downside, a bit of a playground really for trend followers. Selling into that on pullbacks has been an absolute winner for those that are taking that trade, and we think that has got every reason to continue into the next couple of weeks. And we do have job numbers out this week in Australia as well, so we're going to see how the pandemic lockdowns has been affecting the jobs market out there in Australia, which could be a disappointing read, which will just further weakness for that currency against the New Zealand dollar. Okay, so myself, I'm also going with the theme then of the euro dollar weakness. Euro dollar has broken through a key level of support. That now is likely to act as resistance. The moving averages are beginning to fan out as well. Euro weakness, dollar strength for a number of reasons. You can go and check out the report. So selling the euro against the US dollar. And Max is looking at a trade here in the gold market. So the precious metal broken through key level at 118 or 1800, I should say, which again should act as resistance to the upside if indeed the dollar does want to maintain its bullish momentum. Remember, we've been on basically a 2-week high now for the dollar, put on 1% last week. If that trend is going to continue, then that's going to put further pressure on the price of gold, and that could now trade back down to the next magnetic level of 1750. If you look at the daily chart in gold, you'll see we are now, I think this is the 4th consecutive day now that we're trading just below the 200 exponential moving average. Right, now let's jump on to the charts, look at the economic calendar for the week ahead, and maybe look at some charts as well. Come on, let's go. Okay, so this chart shows us the S&P 500, which is basically the top 500 companies traded out in the US. It's like the benchmark, if you like, for global stock markets. Now, you'll see here we have been on a steady incline all the way up from around the 4,000 level back at the beginning of June. So basically about a 10% increase in about 3 months. Now, on last week's price action, we saw a drop of about 2.3, 2.4%, depending, of course, on where you take your line from. So a reasonable size drop just in one short week. Deutsche Bank saying that we're going to have a 5 to 10% correction. But I want you to look at what's been going on in this 10% rise over the last few months or so. Here we've had this pullback. Look at my little line that I've drawn in there. A pullback, pretty much the same as that pullback. Pretty much the same as that pullback. Pretty much the same as that pullback, and so forth. You are getting the picture. So what I'm saying at the moment is that this pullback that we're seeing in the stock market is literally that. It is a pullback, and I'm not getting too concerned about the move away from stocks at the moment. I want to see certainly a move breaking through this trend line support, maybe back down to sort of like the 4,200 level before I would say hang on, we may be having a correction at the moment. And remember, whatever happens in the stock markets does have that knock-on effects in the currency markets as well. Let's have a quick look here at the euro against the US dollar. Now, this is the most actively traded currency pair on the planet. I think the dollar accounts for about 88% of all FX transactions out there, and the euro up there at around 33%. So the euro against the US dollar is the most actively traded currency pair. Normally, you'll see the strength of the US dollar matched by the weakness of the euro, and the reverse applies as well. Strong euro means a weak dollar, usually speaking, not always, of course. So this currency pair has just now broken through the 118 support level. Now this is a big level. You see from the crosshairs here, the last time we got up there, we had this rally. It failed at that level and we pulled back another 200 pips. And when we finally broke to the upside, it retested a couple of times before it actually hit that new high up there at 119. So the 118 level is a big level. We've now taken out that support zone back up to retest and continuing down. So as I said, often old resistance becomes support, old support becomes resistance. This was support. I'm now expecting this to act as resistance. So the bias for our trades this week will be selling the euro against the US dollar, and not until we get above 18, say 25, would I would say that this downward momentum that's been on the way all the way from sort of 119 is going to be reversed. So selling the euro against the US dollar. Let's have a quick look then at the Aussie against the New Zealand, the other pick that we had today. Okay, you see this has been the playground for the trend followers. It's been making a series of lower lows and lower highs on the way down. And remember, these are correlated currencies. We took out what I would consider to be our support zone last week around the 103.70 level. Now, often, as I say, when you break these levels of support or resistance, they come back, they retest, and then continue on down. And that's exactly what's happened in here. We've broken through. We've come back up. We've retested the old support, acts as resistance, and now grinds on lower. I don't really see any reason why you want to divert from this trend to the downside. It's been a really strong trend. This is the daily chart. The moving averages that I've got out here, they're nicely fanned out. There's a good distance between them as well. That always gives you the clue that that the trend is indeed strong. It's not until you go out to the weekly chart that you see the next support zone. The next support zone really doesn't come in down until around the 102 level. So I think this bias continues. Look at this weekly chart showing you all these red candles with high wicks to the upside. Remember, these are correlated currencies, but it's just showing you that the New Zealand dollar is much stronger than the Australian dollar at the moment, and both of these economies are being plagued by lockdowns and so forth out over there. So at the moment we're looking for a continuation of that trend lower. Let's have a quick look now at the economic calendar for the week ahead. Okay, so as always, head over to the forexsignals.com website, scroll down to the bottom, you'll see all our free tools and what have you. Here you'll see the Forex Signals economic calendar. Click on that and away you go. Now I think it's important that you have one of these to hand when you're trading the markets, even if you're not trading the fundamentals, just to be aware of what's out, the data releases, so that you don't get caught out. But of course there are some money making opportunities as well. Now the correct way to read these, of course, is by looking down the impact gauge here. Anything in red, high impact news, likes to have a big impact on the markets. Yellow is medium and green is weak as well. You've got the estimate, and when the actual read comes out, if that's vastly different than the estimate, then the markets do have the tendency to move. So next up, we've got in the UK, we've got consumer price index. Of course, that's inflation. You know, inflation is the biggest read that the central banks look at when it comes to determining where they're going to move and if they're going to move their interest rates or stimulus and so forth. So CPI, remember, they're mandated to control inflation around 2%. But of course, since the COVID hit, they are saying that these inflation reads that you're seeing more recently are like transitory, they're temporary, and that is going to come back into line. But we do like to keep an eye on CPI UK there. Also, this week we've got a lot of CPI data out of the US, a lot of inflation data out of the US this week as well. So do keep an eye out of that as well. Red impact news. We've got the Australian unemployment on the 16th. Definitely want to be watching that, see how the Australian economy has been affected by the pandemic and so forth. I'm expecting maybe a negative read on that, or not such a bullish read on that, which could put the Australian dollar under pressure, but of course that remains to be seen. Lagarde speaking again. That's the European Central Banker. She talks and she'll outline her sort of economic projections ahead. We've got some surveys out of the US. Remember, just go through these. We've got some retail sales out in the UK. I don't know, they put this as medium. I think that's quite important, retail sales, set in this current climate, but there you go. And of course you've got some CPI data out of the Eurozone, and later on in the week we've got retail sales out of the US as well, which is very, very important. So make sure you are aware of the economic releases for the week ahead, and you can access this at the forexsignals.com site. Scroll down to the bottom. Okay, so hope you found that useful. Now, if you want to take part in our daily live streams, you can do so. We are streaming live now up to 6 times a day. Just follow the link in the description tab below. You can interact with us in real time as well. Any questions that you may have, we're basically analysing the markets and so forth. Don't forget to, of course, follow us on all those socials. Leave a comment, let me know what you're looking at this week. I do get back to them in due time. Now, that's not a thing, that's not a problem. I will see you next week. In the meantime, have a good week.